Welcome to Illuminati Silver. We tell you the truth about silver. Today is Friday the 12th of November 2021 and we're producing our Friday morning gold and silver price update forecast and daily news. The US dollar surges today, where the dollar index rises above 95. Let's take a look. Welcome to Illuminati Silver. It's Friday the 12th of November 2021 at 10:40 in the morning. The weather today, invading. Yes, the sky is covered with cloud, the wind is blowing, and there's precipitation. It is invading our personal space. And according to Bloomberg this morning, the United States is warning Europe that Russia may be planning to invade the Ukraine. This is the bit of geopolitical tension that will help drive gold and silver prices higher should this action be carried out. Having said that, we've seen gold and silver dip this morning, essentially because of the strength of the US dollar, which we've advocated for some time. But before we look at that, let's look at what's boosted gold and silver in recent days, and it's inflation and the fear that it's no longer transitory or temporary. Euro area inflation is diverging the most since the debt crisis. Inflation is soaring, yes, soaring according to Bloomberg, across the euro area, but it's also diverging by the most in years, in a further complication for the European Central Bank's ongoing pandemic stimulus. How quickly consumer prices are rising depends on where you are inside the 19-member currency bloc. In Estonia, where energy costs are surging, the 2021 rate is forecast to be 4%. In Greece, where they're regulated, it's seen at just 0.1%. While differences between euro area countries are nothing new, that's the widest gap since the region's sovereign debt crisis, underlying the shortcomings of a one-size-fits-all approach to monetary policy, which is the very reason why the United Kingdom was sensible not to have entered into the euro and follow its monetary policy. And now, since, obviously through Brexit, has come out, because different economies are at different stages of their trading cycles. Makes sense? But there we go. That's politics. ECB forward guidance is no longer working as it used to. Bloomberg economics models show that if the European Central Bank had fully bought into the transitory inflation narrative, it would respond to a hit to income by loosening monetary policy, guiding markets to a later lift-off for interest rates and lowering risk-free lending rates at longer maturities. Instead, what we see is that markets have brought forward expectations for rate hikes and the whole yield curve has shifted upwards. A climb that in part probably reflects the reduction of virus-related tail risks as the year progressed and the global economy improved. But the shift may also flag a deeper challenge that central banks face. Forward guidance may no longer be working as it used to. Beware what you read. According to Reuters this morning, Europe's still in trouble. It's all about Europe this morning. COVID-19's epicenter again. Europe faces fresh reckoning. It's become the epicenter of the pandemic, prompting some governments to consider reimposing unpopular lockdowns in the run-up to Christmas. What is it about Christmas? And stirring debate over whether vaccines alone are enough to tame COVID-19. What will that do for the economy? Business news in the UK, primarily AstraZeneca to take profits from COVID vaccine. There's a surprise. Women warned home working may harm their careers. And there's a high demand for prison officers amid job surge. Well, if we have more lockdowns, there'll probably be more crimes because people will not stand for it. So if you're out of a job and you're living in the UK, become a prison officer. United States and Canada. US journalist gets 11 years in jail in Myanmar. Court temporarily blocks release of Trump's records. This is the Courts of Appeal. And basically, again, we're getting a little fed up of this with the BBC. So little is actually concentrated on the economy. Have a look at what is happening. The dollar index now above 95. Yes, it's breached our 94 transitory level, and it's now 95.16. Not good news for gold and silver, but we shall look at that in a second. Energy prices broadly down, really just reflecting that rise in the value of the dollar. So we have crude oil, both WTI and Brent, in the early $80 mark. Of course, we've long said there's no real justification for oil prices to be above $50 a barrel. They're still making reasonable profits, and most companies, not all, but most companies in the US would make profits at $50 a barrel. Certainly 60. Why it's 80? It's a cartel. Equity markets. In the US yesterday, the Dow Jones was down almost 0.5%, but the S&P and Nasdaq managed a slight tick up. Asia Pacific broadly up, and quite strongly really, over 1%. However, Europe, UK, almost unchanged, although the FTSE's down almost 0.5%. Economic news yesterday, Veterans Day holiday, so nothing was scheduled. Today we have job openings, the UMich Consumer Sentiment Index, and the 5-year inflation rate. I don't think any of that is going to grossly impact the markets today, though obviously what did have a big effect were the CPI figures on Wednesday, and we saw gold and silver literally, when we say skyrocket, it's probably an exaggeration, but rose quite healthily as a result. Now, on the weekend, we're going to look at what's happening next week, but the big day is Tuesday, because we have retail sales. That's a little tip. Gold down over the last 24 hours, $12 at $18.50, basically. It's been as high as $18.66 and as low as $18.47. What seems to be the case at this moment is that now gold is going to be relatively well established at that 1800 level and potentially above. Though if the dollar furthers to strengthen and there is more talk about interest rate rises, then of course that will have a depressing effect, but we all know that's some way off. And so gold is still looking pretty firm as far as we're concerned, within $100 high-low. Silver has fallen back 10 cents, but did extremely well by peaking at 25.30. It's been as low as 24.86. It's currently at 24.91. The dollar's had this impact. If the dollar weakens, then we may see these prices rise again. Cryptocurrency markets in a bit of a tiz, really, down another 2% at 2.79 trillion. Still very healthy. Lots of debate now whether Bitcoin has finally peaked for the year and whether it's just dipping back for consolidation and then a new rise forward to all-time highs, or whether, of course, it's going to now retrace 50-80%. Shall wait and see. That's it for now. Our view, really, strength of the dollar, the geopolitical news concerning Russia and Ukraine, and a few other little tidbits of news coming out are the most likely aspects to affect the price of gold and silver today. And of course, it's the end of the week, so there may be a squaring off of positions. Tomorrow, we'll give our update. We'll talk more about inflation, CPI data, and we shall highlight where we really think now the rest of the year is likely to go. And that video will come out on Sunday. Thank you so much for listening. Please give us a thumbs up, subscribe, press the bell sign. Have a great Friday, everyone. Until tomorrow. Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.